Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look again on the gold market. So in the gold market we were considering, and actually are considering, the pullback that has started. We talked a lot about this in whole week and through the whole week, and actually when it started we said that it's not very comfortable because we have the uncompleted COP. That's every time it will be the, well, at least until we will get the pattern right there, it will be additional risk factor. So initially, if you do not want to wait for a pattern, it would be better to place stop below it. Recently, yesterday and the day before yesterday, we have got the head and shoulders pattern were forming, and we turn our attention to the targets that could be achieved by the head and shoulders. Currently, as you can see, the performance here on the gold market shows the significantly faster progress than on any other asset, especially in the euro currency. On the euro currency, you can see that this market, well, mostly can't show any significant upward continuation, although yesterday the pullback also started. But at the same time, we should understand the performance of the gold market doesn't belong to its own. So mostly it's just repeats the performance of the interest rates. So if we'll take a look, for example, on 10-year yield, take a look what has happened in the recent two sessions. Market starts to retracement, yields has dropped. It's mostly, as you can see, similar than this one and 2 times smaller than this one. So we're speaking about the harmonic retracement. In general, you could see that market is actually repeating this type of action is very often. So more or less with the same distance. Here's a bit smaller retracement. Here's the same. And actually here's slightly larger. It's mostly the same. And here is a bit smaller, but it is not over yet. So market even could try to move slightly lower and it will be just a harmonic swing. So that's what's going on in 10-year yield. And correspondingly on the gold market, you can see the same type of action, but in opposite direction. This is normal. At the same time, currently, I wouldn't consider taking a new long position, and I would prefer to start watching for possible bearish signs by 2 reasons. First of all, on a 4-hour time frame chart, market has reached the confluence area. It's 1923, 1925. This is the first level. Yes, we have very strong action, which is theoretically stands in favor of the further upward continuation. It really could happen if interest rates keep dropping. But don't forget that tomorrow it will be already the Friday, and we're coming to the Wyoming meeting. And if truly will be announced more hawkish program from the Fed, this trend could change very fast. And another factor is that actually, as you could see, that treasury bonds is also, well, not quite, but coming to some final points of the harmonic swing. So theoretically, we can't exclude that when harmonic swing will be completed, some upward continuation will start. It's one of the possible scenarios. And that's why when we're coming to the strong resistance area, yes, of course, we can't exclude that it might be even further continuation to the 1948 and so on, but this is a strong area, and we have to pay attention to possible bearish signs. It's just because right from this point, gold also could turn to the downside. Finally, if we'll take a look at the hourly charts, take a look that the target of the hand shoulders now is completed. We have strong bearish divergence right there, right on the top. And as you can see, that market has hit the XOP, A, B, C, target of the hand and shoulders pattern. It's been done right at the 4-hour time frame confluence resistance. This is really strong area, and it's good points where potentially actually bearish sign starts to form. For instance, why we should not consider this type of action. So it might be the hand and shoulders, right? Shoulder, head, another shoulder, and market could start dropping. I'm not talking that it will be precise daily trend continuation below the 1880 lows, but at least it might be more or less significant retracement right back down. So that being said, if you're considering taking the new long position, I wouldn't take it right now and wait for a pullback from the strong resistance area in the 4-time frame chart. If you're a scalp trader and trade on intraday charts, yes, theoretically you could try to take the short position just blindly around this area, but I prefer to wait for a clear pattern. Once the pattern will be formed, it's much safer to consider taking the short position. Besides, pattern will let you to place significantly tighter stop order. At current moment, it seems that market starts feeling some difficulties with the upward continuation. You could see these tails right around this area XOP is banned, but the pattern is not formed yet, and it would be better to wait when it still will appear before taking the short position.